You will never put your money into a bank run by an idiot. And so you're naturally going to say, well, maybe I won't put all my money into that bank. I'm going to put some of it into a money center bank, some of it into, and I'll make sure it's 250,000 or less. That's okay. But yes, many banks will be consolidated. And this is very healthy. This is very healthy. First to go will be First Republic, could be as early as next week. That's going to zero for sure.
Wow. Or
a version of zero where somebody bails it out and the equity is worthless.
Sure.
Yeah. And the bonds are worthless. And that's okay. I've said it the 5th time. Cull the idiots. It's good.
The viability of regional banks looks shaky despite the federal government's intervention to protect uninsured depositors from collapsing lenders, said Shark Tank investor Kevin O'Leary. A day after the Senate Banking Committee held its first hearing about the failures of Silicon Valley Bank and Signature Bank earlier this month, the O'Leary Ventures chairman suggested on CNN that banks will see major consolidation. I say this is the beginning of the demise of small banks for sure. And now we're going to end up with an oligopoly of very large institutions with an imputed concept that they're backed by the federal government. Not guaranteed, imputed, he said, adding that he was not advocating to see the end of regional banks. O'Leary also said customers at regional banks can conduct transactions online, making it unnecessary for those lenders to operate brick-and-mortar locations. 2 weeks ago, O'Leary said the Biden administration essentially nationalized banks, indirectly putting taxpayers on the hook with the federal protection of depositors beyond FDIC limits. He further talks about the looming FRB bankruptcy, the new monetary regime, and why he is more optimistic about the economy, citing that the U.S. economy is very large and the fears of a hard landing are exaggerated. Let us now get into the video and listen to Kevin as he talks about the bank crisis, the new monetary regime, the debt ceiling, the inflation crisis, and the money supply. Grab a seat and enjoy. Also, don't forget to give us a like, subscribe, and drop your comments below.
We don't need regional banks in the same way anymore because we have online banking, we have electronic banking, we have digital banking. You can make a loan or apply for a mortgage from an online entity that you'll never meet anybody.
Yeah,
and indeed, that's what people do. And so all of a sudden, you start to wonder, why do we need all this infrastructure when really other countries have already proven? England, for example, has 300 banks in total running the economy. Canada, 6. Handful of banks in Australia.
Wow.
2 banks, now 1 big one in Switzerland, with some smaller regionals in Zurich and Geneva. But they don't fail because they're well-managed banks. And there's some examples in the United States, like the state of North Dakota, that has its own banking charter that oversees the regional banks in North Dakota, and they don't fail. It's the idiot banks that cause the problem. So now you're wondering about, what's going on with First Republic. It's going to go to zero because it's run by idiots, and that's okay. It doesn't matter if it goes to zero, as long as we don't guarantee every deposit past the 250,000.
Which we did for Silicon Valley
Well,
Bank.
we shouldn't do that again because you're making someone in Florida pay for the mistakes of an idiot in California, and they're not going to put up with that. They don't have that interest. And so there's going to be a backlash, a pushback from people saying, wait a second, I don't want to guarantee the folly of idiot bankers. And so we have rules in place. The FDIC insurance was only just over 200 billion now. And when First Republic goes down, it'll probably eat up 40 billion of that.
Wow.
So you have to cull the idiots from the herd. And it's okay that all the shareholders at First Republic lose all their money, all the bondholders lose all their money, and I'll tell you why it's okay. The market will self-correct. They'll say, oh, where's my money? Is it with an idiot banker? Maybe I should move my money away from an idiot banker to a less idiot banker. And the industry will consolidate to less idiot bankers in super regionals. The majority of debt that was done in very liquid times with very low rates starts to come due in Q3 and Q4 of 2024. So the defaults will start then, and then the peak of it, the refinancing in 2025 is going to be very high. So that's when all of a sudden the economics of a lot of commercial real estate don't make sense. It'll be upside down. And the equity holders in those real estate buildings, they'll go to zero. But the great thing about commercial real estate, there's always an underlying bid.
Right.
So it's not a zero, it's just that the existing shareholders are going to get wiped out. That's okay, because hopefully they diversified their portfolio. The one thing you get as a free lunch in investing is diversification. So you don't want to have all your assets in commercial real estate, maybe up to 20% maximum, but that culling will come. It'll be 24, 25. That's going to be painful because refinancing that debt that was done at 5 to 7 will be now 9 to 15.
Yeah. Oh, yeah.
And so I feel sorry for those people, but it's okay, but it's not going to change the fundamentals of the economy. It's just one sector under pressure. I'm very optimistic, actually, that the economy is structurally sound and, in fact, even more efficient, that it's come through the pandemic and been digitized. I think the economy is more productive than it was in the 70s or 80s because of digitization and a lot of technology we have today that we didn't have then. I'm kind of optimistic that we're going to get sort of 6 to 8% growth rates on equities, even after all these rate hikes. So I'm not in the camp that says massive recession, because there's another $1 trillion of stimulus that hasn't even been printed yet to put back into the economy. I mean, we have spent too much.
Oh, yeah.
There's no question about that. But having said that, these programs are already law and they're in place.
Is that Inflation Reduction Act money?
Yeah, the inflation. Yeah, I think that's so funny.
Yeah.
I love the names of these bills. Yeah. There's no act of any act, anything the government does that isn't inflationary, because they're printing money.
Of course. Yeah.
And so it's laughable, but we all understand the joke.
In March 2023, the M2 measure of money supply contracted for the 5th consecutive month in the United States, minus 4.5% over 1 year. The identification of the main sources of monetary creation/destruction reveals the impact of the restrictive monetary environment and the resulting trade-offs. Let us now continue with the video.
Well, the binary definition of inflation is too much liquidity chasing a limited amount of goods and services. And certainly that was the case during COVID, because it was an unprecedented situation. We've never had anything like that. I think the government did the right thing in just providing liquidity to keep W-2 employees employed. That's basically what the programs were, PPP, and we'll talk later about the Employment Retention Credit, which is now coming to light as another program that's going into the economy. That there's so much liquidity still, I don't think inflation is going to be easy to tame. And the new normal of inflation may not be 2.5%. It may be more like 3.5%. Particularly when you look at what's happening with energy and food and proteins and things that are stubbornly resisting any kind of a decline in inflationary pressure.
That's interesting. Yeah.
Eggs are a great example. I mean, you're really paying a lot more for those than you used to. You have to add productivity into the equation. You know, people that say we're going into a deflationary cycle are not taking into account the tremendous productivity of the American economy, which hasn't yet been measured on a post-pandemic basis. And so these questions of economics they should be debated, and everybody should understand what's being debated. But I see in my own portfolio of private companies incredible productivity, incredible abilities to pivot and change distribution channels and change cost structures and change communications and outsource, even domestically outsourcing costs they never could before. It's remarkable to watch this happen and how fast that it happens. And so it's very hard to get me in the camp that says we're going to go into a deflationary cycle. I personally think inflation's somewhere between 4.5% and maybe 5%, not 6.1, because of real estate hasn't been marked to market yet. I think it's going to be very gut-wrenching in Q4 of 2024 to Q3 of 2025 on commercial real estate. Maybe $500 billion's lost there. You want to cull your commercial real estate portfolio. 7-8 months ago, when the first narrative came through saying, can Powell engineer a soft landing? I was one of the voices that said never. You cannot engineer a soft landing. It's not possible. You always have to extend into recession, then pull back. Sometimes the market oversees it and says, okay, I'm willing to invest for the other side of the recession. In this case now, I'm not so sure. Of course, everybody hates him. Everybody hates every Fed, okay? Everybody hates every chair. Everybody hates them in every jurisdiction all of the time. In every administration, you always want to beat up the Fed since the beginning of time. But they know that. And so they sit right in the middle of the track and they do what they're going to do anyways. And they just take the slings and arrows and they're called to the hill and they get grilled like a piece of chicken in there. It's over and over and over again. But Powell's done a hell of a good job. He's a very good chair. He's been masterful at using new technology to communicate what he wants to do well ahead of the old leak ways. You know, in the old days they'd leak a letter or something. Now they just leak it digitally. I think we're going to have a period of softness for maybe 18 months.
18 months?
Yeah, it could be that long, and it probably will be triggered by this, call it a pig in the python of commercial real estate. It's got to go through the pig.
Interesting.
You know, it's a really big $500 billion loss, has to be absorbed. It'll wipe out 15% of the regional banks.
First Republic Bank's shares have plunged to a record low after the lender announced that depositors withdrew more than $100 billion, prompting fears of further bank collapses after the failures of Silicon Valley Bank and Signature Bank. First Republic's stock closed down nearly 50% on Tuesday after the San Francisco-based lender disclosed that it lost 40% of its deposits in the first quarter as the banking sector suffered its biggest crisis of confidence since the 2007 to 2008 financial crash. First Republic saw its deposits fall by $72 billion over the period, a figure that accounts for $30 billion rescue package announced last month by a consortium of 11 banks. The collapse of Silicon Valley Bank and Signature Bank last month drove fears of contagion across the banking sector, and investors have been closely watching the financial health of regional lenders, such as First Republic since. Other banks in the United States also saw their share price register significant falls, including Western Alliance Bank Corporation, Zions Bancorp, and JP Morgan. First Republic said on Monday it was considering strategic options to strengthen the bank's position. The bank's recovery plan includes selling off unprofitable assets and laying off up to a quarter of its workforce of about 7,200 employees. Investors have questioned whether First Republic has a future as either an independent lender or as part of a bigger bank. Christopher Wolfe, head of North American banks at Fitch Ratings, said any potential buyer of First Republic would be looking at a big write-down in the value of the lender's assets. The options are very challenging and probably very costly, especially for shareholders, Wolfe told the Reuters news agency. Who's going to bear the cost? According to O'Leary, the First Republic Bank will go to zero in less than a month because it is being run by idiot bankers. What do you think of Kevin O'Leary's view on the banking crisis and his stance on a soft landing? Let us know what you think in the comment section below. Also, don't forget to like this video, subscribe, and turn on notifications. Thanks for watching.